Today we're going over the top 5 costly mistakes I see homebuyers making in today's market here in Louisville, Kentucky. Now, if you're new here, my name is Spencer Lowe. I'm with United Real Estate Louisville. I've been selling real estate since 2019. Make sure you click that subscribe button as well as that bell notification so you don't miss next month's market update or any other buyer and seller tip videos just like this. Now, keep in mind, numbers 4 and 5 on this list are the most important, so you're going to want to make sure you stick around for those. With that being said, let's jump into the video. Now, the first costly mistake I see homebuyers making in today's market is they don't factor in the full cost of actually buying a house. And what I'm talking about here is closing costs. So yes, you've got your down payment, but you've also got closing costs. And it's really important to get a loan estimate before we start the whole buying process from your lender before we go under contract, because let's be honest, those closing costs add up quick. And sometimes we see them, $8,000, $9,000, $10,000 in closing costs that factor in things like your homeowner's insurance for the first year, funding escrow accounts for your taxes and your insurance. We also see things like title work. A lot of times when you go to buy a house, your mortgage company is going to require a full title search on that property. The title company is going to look at things like liens. Let's say they just put in a new HVAC system, but the contractor didn't get paid. We don't want that coming back on you, so we want to make sure that we do our title search before we actually close on the property. That's a typical contingency for a mortgage to see the title work, but that comes with a cost. So we've got some other costs when it comes to buying, and a lot of times they don't factor those in when they're planning to buy. They just look at what's the down payment. Now, if you don't have anything other than your down payment, there is still some options for you. We can look at zero down. That way we can use what you are going to use for the down payment for your closing costs. Sometimes we're able to negotiate in that the sellers are paying some of the closing costs or sometimes all of the closing costs. It just really depends on the situation, how long that house has been on the market, and different things like that factor into it. But we want to make sure that we're looking at the full picture of it and not just, all right, you're pre-approved to buy the house, you've got some money in your bank account. We want to make sure that we're looking at the full situation of buying a house and not just, I've got the down payment, I think I can afford this house. We want to make sure that we get pre-approved early in the process rather than later in the process. So factor in closing costs, get with a lender, talk to them about what your closing costs are going to be for that loan, because switching even products, if you have an FHA loan, conventional loan, VA loan, or a USDA loan, all those different products are going to have different closing costs. FHA has a funding fee, VA has a funding fee. So it's really important to realize that yes, you got your down payment, but you've also got closing costs that we need to factor in when it comes to buying a house. Now, the second mistake I see home buyers making in today's market is they're looking at the estimated payment on different search platforms. Now, I'm not going to drop names here, but what I am going to tell you is that on some of the websites that you're looking at houses and browsing houses through, you're going to see an estimated payment. Now, on those, typically those payments are based on 20% down, and it's also only principal and interest. It is not considering your escrow account, which is what holds your property taxes and your insurance. So when you buy a house and you're making your payment each month, a lot of times they have a forced savings account that basically goes towards paying your property taxes and your property insurance for the year. It also goes, you've also got your principal and your interest that you're already paying. So when you only look at half the payment, it's not typically half the payment, but it's going to add about 20 to 30% to your payment on top of it when you add in your escrows. So keep that in mind when you're looking at that number. One, they're putting 20% down a lot of the time, and the other factor is your escrow accounts. They're not factoring in property taxes and insurance a lot of times. I'm not saying some of them don't, I'm just saying that a lot of times they are factoring that stuff in. They're not factoring that stuff in. So just make sure that when you go to buy, that you actually sit down with a mortgage lender and discuss your estimated payment, your down payment, and your closing costs all up front. That way you don't get surprised on the back end when you see that little number before you requested your showing. You saw that number, you're like, yeah, we can make that work, and then it adds 20 or 30%, maybe a little bit more if you're not putting 20% down. There are definitely mortgage products out there that are not 20% down, and we just need to make sure that we're factoring all that stuff in before we actually go under contract on one. And just because we see it, we like it, and we see that little number, doesn't mean that's your payment. So make sure you have your own mortgage person in your corner advising you on what your payment's going to be, how much it's going to cost you to get into that house, and all the other details on financing is up to them. But just kind of ask those important questions of what's my full payment going to be, how much down am I going to need for this loan, as well as what are my total closing costs going to be on this loan as well. Those are all really important questions to find out up front. Otherwise, it's going to cost you a lot of money on the back end. Now, number 3 is making major financial purchases while we're under contract. So we go under contract on a nice house, we get through inspections, everything looks good, the sellers agree to make some repairs, and we're happy with that. Then we go to appraisal, everything looks good there, appraisal comes back, it's completely fine, and we're a week away from closing, and we go out and we buy a brand new car to go with our brand new house. And all of a sudden your lender picks up the phone and he calls you and says, hey, what'd you do? Just got off the phone. The bank that we're going through, they reran your credit because they always do before we go to closing. They see that you have a new $500 car payment. attached to your credit now. That also makes it so you can't buy the house because now you have too much debt. And now all of a sudden we're losing the house. We have paid appraisals and inspections and some other refundable fees, non-refundable fees, and we're no longer getting the house. So it costs us the entire deal altogether. So don't make any major financial decisions or purchases while we're under contract or before you buy a house. Don't go buy the new car. Hold off until after we close on the house. Don't go max out your credit card because you want a new dining room set. Don't go finance a bunch of stuff while we're under contract. Just wait until we get to closing and then try to finance that stuff afterwards. And those banks can approve you, but sometimes the mortgage lenders are a little bit more particular, and they also don't want to see major changes in your financing while we're trying to get pre-approved or while we're trying to buy the house. So just hold off on all major purchases until after we close, and then go see if we can afford them and fit them into the budget, but it's not something that you do while you're under contract. Now, number 4 is going to be not getting pre-approved early enough. Now, what we're talking about here is looking at houses before we're pre-approved. A couple things that we've already talked about. We're not factoring in our closing costs, so we think we can buy the house, but we really can't without, negotiating the sellers pay the closing costs, so we don't really know what we're looking at. The other thing is we don't know what our payments are going to be when we don't get pre-approved early, but this one we're talking about not being able to get the house under contract because we're not pre-approved. So a lot of times what happens is we get pre-approved, then we start looking at houses, we find the right one, we make the offer, we attach that pre-approval letter to it. That way the sellers know that we've been to the bank's looked at all of our finances, they said you've got the money to buy the house, you have the income to buy the house, and you're approved for this amount. When we make offers that we don't have pre-approval letters attached to, the sellers are going to look at it, and if any other offer comes in, that even if it's slightly lower than your offer, but it has a pre-approval letter, it's probably going to get accepted. So a lot of times what we see is non-pre-approved buyers shopping for houses. They find the dream house on a Friday, they try to get pre-approved, and the bank's closed on Saturday and Sunday, so we can't get a pre-approval until Monday, and all of a sudden that house sells before they can actually put in their offer, because let's be honest, the sellers aren't going to accept an offer with somebody who hasn't been to the bank and has a pre-approval letter. So make sure that we get pre-approved early in the process. Saves us time running around from house to house. It also saves us money, and it also saves us from missing out on our dream house. So get pre-approved, talk to the bank about your closing costs, your down payment, your payment per month, and all the other things. That way we can actually start to budget out some stuff with that lender, and they can really help guide you on what the true rate and cost is for buying that house. So get pre-approved early in the process. That way we can actually get that house that you really like under contract when it's time to. And number 5, and probably one of the most important things that you can do when buying a house, is don't skip out on the inspections. A lot of buyers, especially coming from 21 to 22, we're looking at waiving inspections and saying we're not going to do any home inspections, we're not even concerned about it. The house was built in 2005, it's not that old, we're good. Don't do that. What's going to happen is you're not going to know anything about the house. So maybe the sellers don't know that there's mold in the attic, or there's water in the crawl space, or that the bathroom tub is really loose and the hole underneath of that bathtub is just rotted out because there's been a small leak because the caulking has a leak and it's just dripped for the past 10 years, and well, they never used that bathroom. So we want to make sure that when we actually look at a house and we're looking at buying it, that we add in our inspection contingencies, because those are really going to help save us a lot of money in the long run, because the inspection is going to find things that we didn't notice that are showing. It's going to find things that, that mold in the attic. The last time the seller was up in the attic was 5 years ago, and they haven't been up there since then. So those little things like that the in-home inspector is going to take a look at really helps us know what we're buying and move forward with confidence, and we're able to factor in some of those costly repairs, or maybe even try to get the sellers to pay for some of those costly repairs before we actually close on the house. Now, if you made it to this point in the video, I really appreciate you sticking around. Make sure you click that subscribe button as well as that bell notification so you don't miss next month's market update or any other buyer and seller tips just like this. And if you are looking at buying or selling here in Louisville, Kentucky, give me a call. I'd love to help you out. My name is Spencer Lowe with the United Real Estate Louisville, and I'll see you in the next one.